Hey guys, what's up? My name is Matthew Spazziti and welcome back for another episode of the Weekly Market Analysis. Alright, so we've got a few more trades today. We've got 5 trades that are going on. For some reason, I came into the market and I was kind of debating not even doing this video, largely because I already kind of posted another video from last week. And for the 4th of July and the holidays, usually I end up posting stuff over the weekends after I edit it and pump it out. But over the weekend, I was so busy with family stuff, I just didn't have time to get to it. So, do apologize for that, but we are back now, and I decided to do a quick little video. This isn't going to be a very long one like the ones that you're used to seeing me do, largely just because I already posted 2 other podcast episodes. A lot of times these end up being longer because I'm usually doing a little bit for my podcast towards the end of these videos, and I'm not going to do that today. So really it's just going to be, or at least I don't think I'm going to do it where it's going to be for the podcast purposes. It's just primarily going to be me doing the currency pairs, and yeah, let's go ahead and get into it. So we got 5 currency pairs we're going to do. We got dollar yen, pound New Zealand, Euro pound, pound CAD, and pound Aussie. Those are the trades that I took this week. And we're still kind of waiting on some trades here. I'm going to go ahead and pull up the TradingView Trade Analysis Journal. As you can see, here is our 5 right here that we're looking at. We also have a trade on the pound Swiss that we're still waiting for. We're waiting on the dollar CAD to come to fruition, and we're also waiting on the euro yen. Now, all the way up here, I don't know if you guys remember, if you guys been following it this closely, but we had a trade all the way up here that took place on June 12th, the dollar Swiss, and that trade just finally came to fruition and ended up making me money, which is good because the other trades, most of them didn't. I'm not really expecting all of these trades to be profitable. Again, this is an unbacktested strategy. Okay, this is not going to turn out with making loads and loads of money. As you can see, like when we got started initially, we're looking at 3,800. We were definitely making money for sure. But now that we're kind of getting into a lot of market turmoil, a lot of volatility, and basically a lot of indecision that is occurring in the markets, as to what direction, sometimes the markets are acting like they're going to crash, kind of like at the beginning of 2020, and then now the markets are setting to start rallying and things like that. So if you think the stock market is volatile and crazy, just wait till you guys get into the currency market, the Forex market. It's even worse. Currency pairs look like they're going in a direction, so you start trading that direction, and then they whipsaw you the other way, and you get caught in the whipsaw. And unfortunately, my strategy is so simplistic that sometimes, actually all the time, it really gets caught in those whipsaws, and it gets chewed to pieces. It's kind of what we're seeing here when we look over at our equity curve. Scroll all the way up here. So this is kind of what we're seeing. We were making really new highs here all the way up at $3,891, and now we're making new lows down here at $1,930. So it'll be very interesting to see whether this ever goes back up or whether it's just going to plummet and go down to zero. Now, it may have been that this is not so much because of the volatility as it's because I'm also trading currency pairs that are not profitable. And I'll be honest, that is more than likely what's going on. I'm trading currency pairs that are not profitable. They're not back-tested, so I really don't know. They're not profitable. I guarantee you that's the case. I'm already back-testing currently on the euro yen, and the euro yen is already proving that it is not good for the strategy that I'm looking at. So this is something to keep in mind, that we're not going to be seeing mass amount of winners. This is why I never recommend you guys to trade this stuff. This is just me practicing. This is just me coming into the markets, practicing my analysis. That's all this is. Please do not go off and start trading these these patterns, because don't go off and start trading all these currency pairs. I got a big portfolio here, but I know that if I was to test this strategy over all these currency pairs, probably less than half would end up being profitable, or at least I think that would be the case. I don't really know, but I can tell you they wouldn't all be in the portfolio. Not all of them would be able to be traded. So just keep that in mind. But here we are at the the dollar yen. Okay, here we are right here. So as you can see, we kind of made a new high again right here on June, and we kind of just been going down. Really what happened was that at the start of March, well, actually more like towards the end of March, we ended up coming up here and we ended up falling. And we consolidated sideways for a bit, but as you can see, our highs got lower and lower. And then we finally broke through the support level. And as you know, once we break through, a support usually becomes resistance. And it did in this case. We came up, we got rejected. And then we came up again and we broke through that resistance level. So now it's going to become support. Now we kind of came down and we closed below what would have been the support level at this point. And now we're kind of but we did eventually bounce off of it, rally, and then we used this level again as a support level, as you can see here, because we continued to bounce. Granted, we were bouncing a little higher up here, if you look left, structure release clues. We have a support level here, we've got it here, so the market has valued this price level before. And now that we are kind of going sideways, the market broke below again. And just kind of once again, it broke below this support level, but it ended up breaking below and bouncing off the lower support level right here, and then it rallied to new highs. Now that we're at the new highs up here, we ended up breaking above a lot of different resistance levels. We ended up violating this minor structure level right here. Well, it was definitely more of a major structure level than these were, but we ended up breaking above this. So naturally, when you see this indicates that the reversal was here and that we're going to go higher, right? But is this a true reversal or is this a false breakout? Now we kind of come down and then we try to come back up again and we go down again. And now we're breaking these different structure levels. So, we kind of retested these lows again, and we're kind of bouncing off that. I really don't know. I mean, right now, it depends on what you're looking at. But to me, I see consolidation. That's what I see. I see sideways, choppy movements. That's what I'm seeing. I'm seeing consolidation where we're kind of just bouncing around this support and resistance level right here, and that's virtually what I'm seeing. I don't see any real market direction right now. I just don't. Now, if we were to zoom out to the 4-hour, you can definitely tell we are in a consolidation period in the market. We're not trending like we were here. This was a retracement in the overall bearish trend. Let's see. Yeah, so bearish, bullish, retracement, and then bearish again, although this was much faster. Had a small bullish retracement here, kind of another bearish one, and then we had a bullish one, and then we just kind of tanked. I mean, I would say this was just more or less the crash in February 2020. This was the crash, and now the market is doing this. All right, what I'm seeing, let's draw this in real quick before we actually hop into the trade, is this. Okay, market indecision. This is what I'm seeing. I am seeing market indecision. All right, this is exactly what I'm seeing. The market is creating what we like to call in the trading world as a wedge pattern. Now, this isn't an ascending triangle or a descending triangle. This is a wedge pattern. And I'll be completely honest, a descending or an ascending triangle, I'm not entirely sure. Those may also be classified as wedge patterns as well. But I know for a fact this is a wedge pattern, okay? And this is indication of market indecision. The market overall does not know where it wants to go. It crashed and then it rallied, and now it's just kind of going sideways. Eventually, the market will break out somewhere, and we'll have to be on the lookout for false breakouts. The market may break out towards the top, towards the end of the year, and then take an even further dive. I really don't know. It could rally, it could break towards the bottom as a false breakout, and then rally and go to new highs. I'm not 100% sure what's honestly going to happen, as nobody is, right? Nobody is. Nobody really knows 100% what's going on in the markets. That's just the truth. I know that there's a lot of people out here who don't want to admit that, but nobody really knows what's going on. No one has a crystal ball. If there's any one thing that you guys remember, it's that nobody has a crystal ball. So it's important to understand that. All right. Here we are, the dollar yen. The reason I took this trade was ultimately I took it because I saw that we broke out over this structure level right here. And, you know, it's a little interesting. I'm kind of thinking that I may end up getting stopped out here. But for now, what I decided to is because we broke out, I didn't want to measure my fib retracement tool from this swing low to this swing high. I wanted to draw it from here, this swing low to this swing high, or the structure low to structure high. I mean, either you call it swing low, swing high, structure low, structure high, whatever. And this is what I decided. So this is the reason I chose this is because this is the midpoint of the overall leg of this entire move. The initial point where this move started was all the way down here, okay? And then this was more or less the midpoint between those two. So if I get this wrong, I can always remeasure down here if I want to retake this trade and try to take a second stab at it. That said, though, I may, if we completely fall down here, I might decide not to do that. I may decide that, you know what, I think the market just kind of came up here and is going to continue to fall and go lower. I don't know, but that might be something that I may decide to do. On the relative strength index, the RSI, we are overbought. We were overbought right here. And then I believe we were overbought. Yeah, we were overbought slightly here. And now we are oversold right here at this point, okay? As you can see down here. So, again, it's consolidation. It's sideways movement. It's not something that's easy to determine, particularly when you're trying to find a trend. I mean, my strategy works really well as a trend continuation. So you have to have a trend in order for the trend to continue. Doesn't work so well during consolidation. But that's what I saw. I saw that the market broke above this structure level right here and is now retracing back in, and I decided to draw my fib retracement tool from this structure low to this structure high as the midpoint. If I had decided to draw it from this structure low, as I previously just did, to the structure high, if I had done this, I would have had to have waited for the market to get all the way down here. Now, coincidentally enough, if the market gets all the way down here, then I'm probably going to get stopped out to begin with. So, I don't know. We'll have to keep a close eye on this trade. But in the end, I mean, stops and entries and targets have already been placed. So, our exits and entries have been placed. We just have to wait and see what is going to happen. So, all right, let's move on to the pound New Zealand. Let's see if I can find it here. Aha, here we are. Pound New Zealand. This one is much more cut and dry. As you can see on the hourly, we have been doing nothing but trending down. Bearish trend, okay? That's what we've been doing. We zoom out to the 4-hour chart. What have we been doing since literally March 2020? Trending down. Bearish trend. So we are definitely in a bearish trend. I think anybody would agree with this. We were bullish back here on July 19th all the way to March 2020, and then we turned bearish. So this is pretty good overall. This is a good sign. Now the question here, this could always be a reversal. Always keep that in mind. This could be a reversal, but for me personally, I decided to measure my fib retracement tool from this swing high to this swing low, like this. Swing high to swing low. Just like here. I got my 6-1 fib retracement tool. I saw that the market broke and violated structure right here at 191.21 and has now is rallying back up and is retracing. So, question is, did I choose the right structure point? Clearly, this is not a terrible structure point to choose. This could absolutely be the correct one. Or would it have been this structure high up here? Now, coincidentally, the entry for this trade would have been right a little bit above my stop loss. So I'm not really sure 100% which one would have worked. This is why I tend to try the minor structure level. This is definitely minor structure level, okay? For those of you guys who are wondering, this is definitely minor structure. I chose the minor structure first. Again, it's the midpoint of the overall leg of the move. So I decided to choose the minor structure level because sometimes if we are in a powerful trend, then what happens is that we'll come up here, but we'll never get all the way up here to where I would have been involved in the overall leg of the move. I mean, the overall where the actual leg of the move started. The actual leg of the move started here. But if I had measured my fib retracement tool from this swing high to this swing low, I never would have gotten involved. So what I like to do is I like to take these minor trades. Minor structure level trades. The problem with that is these minor structure level trades don't always work out right. Okay, so that can be a big problem. That said, though, sometimes it does work out in my favor, right? Sometimes it absolutely works out, and sometimes it means that I end up taking two trades. Sometimes I take a trade here for the minor structure level. It doesn't work out. I'll take the trade for the major structure level, or at least the more significant of the structure levels. And if both of those end up not working out, then I stop trading and I just wait for the market to put in a new direction, and then I go from there. Again, it could violate this structure level, could violate this. It could come up here, violate this one, and it could respect this one. I mean, come on. How is it anyone is supposed to know which structure level it's actually going to respect? Structure in the markets, another term for structure is price action. Price action and structure are very, very fickle things, okay? They're very, very fickle. That's just the truth. They're very fickle. So you don't always want to base trades 100% off minor structure. You want to zoom out, like I just did here, and you want to determine what you're seeing. There are other things that you could do. Now, I know for me, the bulk of my trades are based almost entirely, purely off of structure. So that's just the way that I like to trade. But that said, though, I don't use the average true range. I don't use indicators. I don't use stuff of that nature. I just don't. I could, but I don't. So, but anyways, that being said, guys, a lot of times using the higher time frames is good. You don't want to base your trades purely 100% off the smaller structures. But, well, I mean, I guess I shouldn't say that. You could do that. All right, you could base your trades completely off of this minor structure level. We broke below. Are we going to respect this minor structure level? So you could do that. You could base your trades purely off of it. It's just whatever you decide to do, make sure to backtest it. Okay, make sure to backtest whatever you decide to do. That way you can confirm over historical data whether or not you're going to have a successful trade or not. So that said, this is the the pound New Zealand. Dollar yen was the one we just did previously. And yeah, so that's what we're doing. It looks like a pretty typical trend continuation strategy here. It just, pattern is what I meant to say. It's a typical trend continuation pattern. But that said, though, we're just kind of waiting to see whether the market's going to respect this structure level or this structure level. So, and that will kind of be a big determination as to whether or not how strong this bearish trend really is. So, okay, moving on to the euro pound. All right, the euro pound, you can't really see it too well. There we are. Okay. The euro pound is another one of those situations where, let's zoom out to the 4-hour real quick before we get into this. All right, so since December of 2019 and February 2020, we were kind of we came all the way down. We were bearish up until December 2019, kind of came up and attempted to put in what is called a double bottom. Let's actually zoom in here and see if it was. For a double bottom to be valid, the lowest low on the second retest has to equal the lowest close on the first retest, but it cannot close any further. So in this case, below the first test. So of a price level. So here we had the first test of the price level was down here at this, maybe a little lower, like right here. Either way, 82.82. We came all the way up here and we came down, and look, lo and behold, the lowest low of the second retest ended up equaling the lowest close of the first test. And we did not close below, see the body of the candlestick here, we did not close below the first test of the double bottom. So this is a valid double bottom on the 4-hour chart. Okay, that's very important to understand. A double bottom in this capacity, in this way, is considered, because it's at the end of a bearish move, or a bearish trend, if you will, that dates all the way back to August 2019, so a fairly long bearish trend. It signifies a reversal in overall price action, a reversal in market direction. So we reversed, we came up here, and we closed above the previous structure high of 93.24 all the way up here. Now, what does that mean? Does it mean we're bullish? Well, not necessarily. As you can see, the market kind of came down again and is now kind of rallying. So we could be bullish and we could be rallying higher. We could also be bearish and we could be going lower. Okay, this could just be a stopping point and we're going to go ahead and roll over. Again, nobody really knows. I know that I know that's not a sexy thing to say. It's not desirable, is it? Nobody really knows what's honestly going to happen in the markets. Nobody ever does. Nobody knows for sure. But that's the truth. No one really knows what's going to happen. You can use technical analysis to try and determine market direction, but in the end, it's not foolproof. It's not 100%. Nothing in the market is. And don't let anyone tell you differently, okay? So that being said, what I saw here was the market came up, rallied, and violated this structure level right here, okay? And we broke above, and now we're retracing back in to, let's go ahead and delete this and let's draw this in, to this support zone, or what I think is going to be a support zone. All right, that's what I think was going to happen. We rallied and we are now retracing back into structure, and hopefully we will find support and rally again. That's my hopes. But again, I chose the midpoint of the overall leg of the move. The leg of the move really started all the way down here. This was the initial impulse of the move, and I chose the midpoint here. Now, this is a valid, relatively major structure level. Okay, if I had measured all the way back here, this trade would have been far too big, and I would have risked far too much money. On the euro pound, we're already risking about $128 hypothetical money, as you well know, to make 185. But that's what we're doing. So I don't think I chose minor structure level. This is not. I would not consider this to be minor. This is pretty large. This tiny thing here would have been minor structure. So if I was going to look for here, if I was going to look at this leg of the move, I would have measured from here. That would have been the midpoint. That would have been the quote-unquote minor structure that I usually talk about. But in this case, I view this as the actual major structure level we're going to look at. This is minor. And because the market was already so close to the minor structure level, I just did the measurements and decided to swing for the bigger one and kind of go from there. That said, though, I mean, again, if I had done this, there's no way I would have been able to afford it. I would have been able to afford it. I mean, it's hypothetical money, but it would have been too far out of my risk to reward ratio. I mean, again, I like to take trades that have a little over a 1-to-1 risk reward ratio. So right now it's 1 to 1.45. So that's, oh, not 45. I'm sorry, 1.43. Okay, so I stand to make a lot more. As you can see, this gap is much bigger than this gap, than I stand to lose. That's the kind of math that I like. Now, I don't know how consistent that this strategy is on the euro pound. Okay, I just don't know. I haven't back tested it yet. So currently I'm on the euro yen. If the euro yen doesn't work out, I'm going to try the euro pound because I've got the Aussie CAD the Aussie USD, and I got the CAD Swiss. All three of those have worked out. If the Euro Yen doesn't, I'll go with the Euro Pound, and I'll look at that. I don't have a pound pair, and I don't have a Euro pair yet. So the Euro Pound will definitely be the next one. And then I'll choose a pound pair and then probably a dollar pair. I mean, I already have the Aussie USD, but I would prefer to have a dollar pair where the dollar is the one we're basing it off of. So either dollar CAD or maybe dollar Swiss or dollar yen or something around those lines. So that's what we're going to do. So we got an Aussie, we got a CAD pair, I want a Euro, and then a pound, and then a dollar. And in terms of New Zealand, possibly I could go for a New Zealand pair too. So New Zealand CAD, New Zealand yen, New Zealand dollar, or New Zealand USD. So we'll just have to wait and see. Anyways, that's it. We're getting off topic. This is what I decided to do. Market broke above structure, and I decided to measure my fib retracement tool from the structure low to the structure high. And we got our 618 fib retracement right here. So I think I feel pretty good about this one. I don't know for sure if this is what's going to happen, but I do feel decent about it. Now, if this does come to fruition, I'm hoping that it does it quickly, regardless of whether I end up making or losing money on this. I hope it does it pretty fast. But I don't know. I mean, the market, I think, is really just consolidating after the initial drop in 2020. Again, I think almost all the currency pairs are doing virtually the same thing, or at least most of them are, where they had a drop or they had a big rise in value, and now they're just all kind of waiting until something happens. I mean, look, August 2019, all the way down here, we just had this big, long trend here, and really, where was the February 2020 move? February 2020 didn't really happen until here. So in this case, the euro didn't tank against the pound. The euro spiked against the pound. So unlike in some of the other currency pairs that we looked at, let's see, like the dollar, was it the dollar yen? Unlike the dollar yen, where in February 2020 we had the market basically crashing and the market tanking, when it comes to the pound, which one were we on? Pound New Zealand. No, it wasn't pound New Zealand, it was euro pound. My bad. When it comes to euro pound, we actually ended up spiking. So you see, sometimes we have the opposite reaction depending on the currency pairs and their relations against each other. But the euro ended up spiking against the pound, not falling and crashing. So, but either way, I still say we're in consolidation. I still say that the market isn't 100% decided. So anything can happen. I mean, we're kind of, the Forex market's kind of like the wild, wild west. Anything could happen. It's kind of crazy. But, that's the fun part about the Forex market. So hopefully we will find support and we will rally and I'll make myself some hypothetical money. But, we'll just have to wait and see. All right, Pound CAD is our next pair. I don't feel too confidently about this. From what I can see here, let's zoom out to the 4-hour chart. Okay, so this is what I see. We were bearish, then we turned bullish, and we broke above structure level, and then this was not actually February 2020, I'd imagine. Where was February 2020 in this case? You know what? February 2020 was around here. We didn't really have any big market move. The big market move for this particular currency pair, the pound CAD, didn't really come until March 2020. And we had a very, very big decline from from 1.80 all the way down to 1.65. So that's a fairly significant move. And as you can see, it happened in a very short period of time. You see a lot of really big red engulfing candlesticks. It happened in a very, very short period of time. Unlike this, where it was more just stepping up, stepping up, stepping up, stepping up. This is the type of market moves that I like to see for my particular currency pair or currency strategy, my trading strategy. This, I can't do anything with this. The only thing I guess I could do is I could look at this and I could say, okay, so we broke above this market right here. We broke above this structure level right here, not market. And so I could, I'd want to measure from here to here. Clearly that would have gotten stopped out. So then I can measure from this structure low all the way to structure high. And we probably would have gotten a 618 fib retracement. But now, as you can see, we're just kind of slowly declining. We look like we have a double bottom here. Let's actually zoom in and see. That's an interesting point. Do we have a double bottom? Yes, we do, because the lowest close was right here, and all of these lower lows, the lowest low is here, definitely equals the lowest close of the first test. So this is definitely a valid double bottom pattern. It also comes on the back of a bearish trend. This is a reversal. Okay, this is what this looks like. Now, double bottoms and double tops, in my testing, they're not that accurate. Okay, I've tested them many times. They're not always the most accurate patterns out there. So take it with a grain of salt. But in this case, I think we are highly likely to get stopped out. And my main reason for it is largely because while I do think that this was a fairly major structure level to measure from, I don't believe that it was a minor structure level to measure from. I guess the more major structure level, the next major structure level would have been up here. It would have been here or here. This structure high or these structure highs right here to measure from. This was the most recent. That's why it made sense to do it. But the market is acting as though it's going to reverse and probably going to go a lot higher. And because, look, we're kind of in consolidation. If the market comes up here, it will confirm to me that we are in a consolidation pattern. I mean, I guess what could happen is we could just rally and continue higher. But I fear that we're more in consolidation than anything else. And because the market already blew past my entry and now found support, let's go ahead and zoom in here. The pattern found support at my entry level right here. That indicates I'm going to get stopped out effectively. But this is what I saw, though. I saw that the market violated the structure level right here. We broke below. And then we're retracing back in. That's exactly what it is. So I drew my fib retracement tool from this swing high to this swing low. Okay, we got the 618 fib retracement after we broke below, closed below, and then we are rallying back in. So anything could happen. I've had trades that get within a few pips of my stop loss and then take a couple days, a couple weeks to basically get me my entry, but I've had that happen before, so that could easily happen here. But I don't feel that confidently about this, largely because we've already gone past my entry, and that doesn't make me too happy. All right, we are coming to the end of today's episode. It is the Pound Aussie is going to be our last pair. As you can see, it's even worse than the Pound CAD. Okay, the Pound CAD and the Pound Aussie, I actually found. When did I take these trades? So the Pound CAD or Pound Aussie I found on July 1st, so last week, and I believe the reason I didn't post it was because of all the other stuff. I think I calculated it out, like I actually like wrote it down, but the reason I didn't actually record it and like post it up until recently was largely because of the holidays. So and the same was true for the Pound CAD and the Pound Aussie. So both of those were true. Those were taken last week, and the reason I just didn't post them was due to the holidays. I really should have, but unfortunately holiday stuff happened. I know it wasn't July 4th on the 1st or the 2nd, but, just family stuff ensued. I had to help clean the house and all kinds of stuff. A lot of family stuff was happening and whatnot, so that's just the way that it goes. That said, though, which, by the way, the 4th of July was awesome. I live in a neighborhood where you can shoot off fireworks. Fireworks are legal. So wherever you're watching this from, if you're watching this in the U.S., then you know that a lot of neighborhoods, at least a lot of neighborhoods in North Texas, they ban fireworks in a lot of the suburbs. So, but the suburb I currently live in is more kind of on the edge of the country. So, and it's really, really nice. But I'm going to be completely honest with you. I love the fact that fireworks are legal. So the entire neighborhood is like sitting at a fireworks show. You see, like me and my wife, we just got some lawn chairs. We sat out in front of the driveway. My daughter was asleep, which was awesome. And we just saw fireworks shoot up over houses, in front of us, behind us, to the left, to the right. We had some people that were shooting them off in the streets. It was crazy, crazy stuff. A lot of you were probably a little risk averse, and they're like, oh my gosh, they're going to blow up a house. And, well, I'm not going to lie. It is a possibility. but it didn't end up turning out that way. It was so cool. It was amazing. I love this neighborhood around 4th of July and New Year's because it gets like that. And the best thing, within a day or two, it's all cleaned up afterwards. It doesn't end up messing the streets up, and most houses and cars are perfectly fine. I mean, they've been doing this here for like 15 years at this point, because that's how long at least that's how long my house has been here, for like 15 years, I think. Or maybe it's more 12. Either way, they're doing it for a long time, and no incidences, or at least very few incidences, have occurred. It's pretty freaking cool. That said, though, pound Aussie. Let's zoom out to the 4 hour, see what's going on. We're going to get stopped out, or it looks like we are. After the market looked like it was going to give us profits, the market is reversing, and I'm very not happy about it. Not happy at all. All right, let's find out, where did the February 2020 move come in? Okay, so February 2020 was around here, had a little bit of a decline, not much, to be honest. I would have expected it to be much, much more. We had a bigger decline here in December 2019, but the February 2020 decline, I don't know, it didn't really happen. And then, of course, we had the bigger spikes in value really more around March 2020. So, again, pound didn't really have a lot of the big spikes up until March, it seems. Because the pound CAD, if I remember correctly, was very much the same way. Yeah, the biggest move was really more down here in March 2020. So, kind of interesting to see. In this case, we kind of ended up going up, and now we're just kind of declining. But we're definitely bearish. I mean, the chart is moving from the top left portion of the screen to the bottom right, so we're definitely bearish, undeniably so. What I think is going on here is, just like in a lot of the other currency pairs that we saw, we put in what appeared, at least initially, to be a double bottom. This is not a double bottom. It's not a valid one. Why? Because the lowest low of the second retest did not equal the lowest close of the first test of this price level. So therefore, this is not a double bottom. We can zoom out. Again, it's the same story. It's too short. It's not a matter of time frame analysis. It is and viewing on the higher time frames, it is a matter of the fact that it just did not get low enough. This is not a double bottom. But the market is still rallying. And I have a feeling that this was, well, not nearly as major structure as up here. So if this ends up getting stopped out, the next structure level, man, this is kind of hard. The thing is, if I measure from this structure high to this structure low right here, and we got all the way up here, this would be a very big trade and probably outside of the realm of what I can risk on the trade. The pound Aussie, the trade that we're on right now, is already risking $111. If we go up here, I guarantee you that it's going to be risking a lot more than that, because the stop loss is going to have to be above 184.53, at least by 10 pips. So you're looking at 184.63, which is right here, okay? And you're looking at entering somewhere in this mid-range, around 82.30s, around there. So I don't know for sure, but I'm pretty sure that we would not be able to take this trade due to the risk. But if this breaks structure, we'll chop it up to that, and we'll just wait and see what happens. You know, one thing we could do is, we've got a lot of other minor structure levels to measure from. We could measure from this structure level, right, from this structure high to this structure low. We can measure from this structure high to this structure low. Or we can measure from this structure high to this structure low. So there's lots of different points we can measure from. The problem is, these are all minor. These are way more minor than this was, and it clearly is going to violate. I mean, we're pretty darn close. I mean, it could reverse, and if it did, I'd be thoroughly impressed. But I don't think that's going to happen. I don't think it's going to happen. I think this is definitely going to stop me out. The question is what to do from here. Well, the 618 fib retracement level from the whole move is here. So I guess I'll look at the overall move. I'll do the calculations. I'll see where we are price-wise and kind of just go from there. It's kind of the only thing we can do. But that's kind of my analysis for this week, guys. I hope you guys enjoyed it. You know, so yeah, that's just kind of, you know, I hope you guys are getting a good sense of what trading is really like. Again, this is me on my journey to becoming a consistently profitable trader. Trust me, when I become a consistently profitable trader, I will definitely let you know. But at this point in time, I'm still backtesting, you know, currency pairs and strategies and stuff of that nature. And I just wanted to give you guys an idea of what this is really like. One of the reasons that I decided to actually do this video and to decide to start posting content was I was trading outside of a trading strategy. I was trading with no trading strategy. Well, I had a trading strategy, but it wasn't backtested on the stock market with options. And I ended up making money even though I didn't have a backtested strategy. Now, that said, though, I stopped because I realized that it wasn't a good idea for me to do that, but I decided that, hey, I'm not completely devoid of knowledge when it comes to this stuff. I've been studying this stuff for a while. I've even made some money on the options market using this very strategy, by the way, or a very similar strategy to this, a trend continuation strategy. And what I can tell you is this, that was, I learned that I didn't want to trade without a backtested strategy because I knew that my days of winning money were numbered, and that ultimately, eventually I would get into the point. See, one of the best things about options is that you can make a lot of money with very little amount of money. You control a lot of shares with very little amount of money. The problem with it is the cons are exactly the same on the flip side of that. You can also lose a massive amount of money. Okay? You can also lose your money very, very, very quickly. Probably faster than you're going to make the money. So it's just, it's one of those situations where you just need to understand that trading, regardless of the market, on any market, is not a good idea if you don't have a back-tested strategy to go with it. Okay? So you are trading blind. You are effectively putting a blindfold on, trying to shoot at a target at the dead of night when it's pitch black outside. You can't see a thing. That's effectively what trading is when you're not trading with a back-tested trading plan. You see, the back-tested part is key. So anyways, but because I did make money, I decided, hey, I feel like I have a pretty good idea of what I'm doing. I've been researching and following this stuff for 5 years now. And, you know, I feel like I'm pretty knowledgeable about it. I feel like I could teach you a course. I could do a live training room. I could do all that. I can talk the talk. And clearly, because I made money in options, not even in Forex, but in options, I was able to walk the walk, or walk the talk to some extent as well. But I also realized at that time I wasn't really doing what I was supposed to do, so I stopped and I decided, you know what, I'm going to start back testing. I'm going to start doing this the right way, and I'm going to start posting my findings and showing people the journey of all of that. So that's kind of why I decided to do it, was because I saw potential in the fact that I made some money, and I thought, you know, hey, it gave me confidence to say, I feel like I know what I'm doing overall. Not to say that I'm perfect, not to say that I always know what's going on in the markets, but I feel like for the most part, I know what I'm doing. I have a very, very good idea of what I'm doing. So now I want to show people my journey of doing it the right way. All right. And that's kind of why I decided to do all this in the first place. So that said, guys, you know, again, look, no one has a crystal ball. You could be doing this for 20, 50 years. And you still are going to lose money. It's not, losing money isn't a matter of if. Losing money is a matter of when. Okay, you're going to lose money, which is why you need to control your risk with stop losses. Control your risk. Okay, I mean, I've told this story before, but I had a buddy of mine, a really, really good friend, one of my best friends in the world, and he still is today. He was trading, he got into trading before me. He actually was the one that got me into trading, coincidentally enough. He paid money to be part of this course, and he paid a lot of money. I thought he paid too much, personally. So I decided to see how much I could learn without paying any money. I eventually broke down and bought a course for $2,000. The course was called the Pro Trader course. It was at Trade Empowered. And that course is no longer available anymore. Now they've changed it to the Ultimate Trader course or something like that. Trader, I think Ultimate Trader Transformation, something around those lines. That's like a $4,000 or $5,000 course, or at least it was when I last looked. And now a lot of the mentors that were at Trade Empowered have moved on to other companies, like Akil Stokes. I used to be part of his live trading room. He is now at Tier 1 Trading. Jason Greystone does the London session. And he's in, I've actually have seen him do a lot of trading strategy. He's taught me a few trading strategies as well and whatnot. But anyways, a lot of those guys that were at Trade Empowered ended up moving on. But that course is no longer available anymore. But that course was only $2,000. Well, my buddy spent a lot more than that. I'm not going to tell you how much he spent, but he spent a lot more than that. And I thought I could do better. And at first, I was approaching this whole thing as a get-rich-quick scheme. That's what I thought it was. That's when my buddy got me into this. I thought, oh man, it's just a get-rich-quick scheme. You're just trying to make money very quickly, and you can't do this, or this isn't a legit thing. No, it turns out I was wrong. My research proved me wrong. It is possible. And actually, my buddy got into options, which is where I started. I got into options because of that. When I found my mentors like Akil Stokes, Jason Greystone, Charles Miles, and also Jason Stapleton, he doesn't teach trading as much anymore. He still does from time to time. But these are my mentors when it comes to trading. And these guys, when they got me into Forex, they were trading Forex. So I liked what they were saying. What really attracted me to them is that they told me that it's not a matter of if you're going to lose money. You will lose money. It's a matter of when. And that's not a sexy thing. Okay? We're not selling you a lifestyle. We're selling you a skill. We're going to teach you a skill that if you do what we say, and you do all the necessary work, there is a chance, not a guarantee, but there is a chance. They believed it was a pretty good chance that I would be able to make money on my own and thus control the source of my income. The strategy, in effect, would become the asset, and that would become the income generator. I would learn how to put money into a market and take more out on a consistent basis, on average, higher than my losses. And that's what they taught me. This is why it is so pivotal for you guys to find the right kind of mentors. Now, as I've said, no one has a crystal ball. But the right mentors change everything. It really does. And it was that message that got me to buy their course when they were all at Trade Empowered. And it was that message that you're going to lose money. So you need to learn how to appropriately manage your risk in the markets, and that you need to learn how to backtest a strategy over historical data so that you can show there's a positive expectancy. And you also need to keep a trading journal, and you need to have a trading strategy and the whole bit. And then you need to get into money management and whatnot to accelerate your trading account and all that kind of stuff. The growth in your trading account, that is, and also to reduce losses as well. Again, that's what they taught me. It was that overall message that actually seemed reasonable. You see, most people that I had found before them were largely selling you a lifestyle. Trade on the beach, trade wherever you want, travel the world, live in Europe, trade in Europe, get a little Tuscan Italian villa and trade in Tuscany or whatever, drive sexy cars like Ferraris and Lamborghinis, and, all that stuff is great, and I hope to be able to achieve some of those things at some point in time in my life, but that's not really why I'm getting into this, and a lot of that stuff just seemed like get-rich-quick schemes, and I don't know about you, but I get turned off by that kind of stuff. I get turned off by get-rich-quick schemes, and that's what it all appeared like. Now, I found other companies that seemed like they were teaching good stuff overall. They seemed like they were teaching very good stuff, but in the end, I ended up on my trading mentors because they seemed like they were teaching the best. All right, so I promised you that this was going to be well, I didn't promise, but I said it was going to be a short episode, and here we're already at 49 minutes. Definitely going to be in the 50-minute range. Not a short episode. Man, even when I want to do a short episode, I mean, it took me so long to get through 5 currency pairs anyways. It was well in the 30-minute range. That should have been when I ended it, and I didn't. I just had to talk more. Oh gosh, I like to talk a lot, as you can clearly see. One day, I hope to actually have the setup to actually where you guys, I can have a camera and you guys can actually see me and not have to look at my picture right here in the top left corner. But you know, for right now, I don't really have that setup, and eventually I will. And eventually, you guys will see me do actual videos of myself and whatnot, and you'll see me. I'll move my video camera stream to the top, bottom left corners when I'm doing these trades, or maybe I'm not gonna have my face. I'll have my face on there, and we'll transition to charts, and then we'll transition back. That would actually be easier for me. That said, guys, look, your mentors in all of this mean everything. If you choose me to be a mentor, to show you my journey, because maybe you're just getting started and I'm further along than you, then hey, welcome aboard. I'm so happy to have you. But I can't teach you the advanced stuff yet because I haven't achieved consistent profitability yet. I don't feel that it would be ethical for me to put together a course and charge you money. I don't feel like it would be ethical for me to put together a live trading room and charge you money for that. I'm not a consistently profitable trader. I just want you to come along the journey to see what it's really like, okay? And yeah, you're not seeing the back testing because that's mind-numbingly boring. I mean, that's hours upon hours worth of work of me just thumbing through charts, essentially. Not really thumbing through, but scrolling through candlestick patterns and charts all the time. I mean, I don't know. For me personally, I didn't think that would be something that you guys would enjoy. So I started to do that and then I stopped. If you guys want me to do that, let me know. Comment. Tell me that's what you want. And I'll start putting something like that together. But up until that time, I think this is more enjoyable because you're seeing me go over what is essentially live data. Okay, this is a live trades, live data. You never really know what's going to happen. It's not historical data. So anyways, that said, guys, your mentors are incredibly important. I hope I will be a mentor to you guys. I'm trying to be. I'm trying to show you my journey and trying to show you the realities of learning the skill. I mean, I've known this stuff for 5 years. I'm still not consistently profitable. Now, I will admit I was still in college. Actually, I was in college. I graduated college in 2017, so 3 years ago. I was still in college around the time. And I have to admit to you, I wasn't always focusing heavily on this stuff. I was very distracted with a lot of things. From college to moving to different homes, having a baby, stuff of all that nature. Life stuff. And also, I'm a huge procrastinator. I'm going to tell you right now, I'm one of the biggest procrastinators you are ever going to meet. Okay? I know that's not, again, a sexy thing to say. Doesn't make it sound like I'm a big successful guy. Well, I'm not successful yet. This is my journey to financial freedom. If I was already there, don't you think I'd say it? Yeah, I could sell tons of stuff. I could make lots of money if I was already there. I'm not there. I'm not there yet. I'm gonna be. I promise to you, I promise to myself that I will be there. I will be financially free. I will be a consistently profitable trader. But I'm not there yet. And that hurts my ability to make money online. I understand that. But right now, my purpose is to show you guys the journey. Now, I'm still trying to figure out how I can make money online, despite the fact that I'm not there yet. I really haven't figured that out yet. A lot of me making money online really starts to center around the idea that I have to be consistently profitable, unless I'm selling you guys somebody else's courses. And hey, affiliate marketing is great, but it's not controlling the source of your income. I don't control those products or services. That said, though, that is a great transition into this. Look, I'm talking to you guys about the importance of finding a great mentor, whether it's Akil Stokes, Jason Greystone, Charles Miles, Jason Stapleton, or myself, and I hope it's me. Or, hey, you can have multiple mentors like I do. Look, if you're looking for a great mentors, and you're looking to learn the art and the skill of trading, and you're looking to ultimately learn how to trade the markets, and you want to know the advanced stuff. I'm good at doing the basics, but you want to know the really advanced stuff? Go check out Tier 1 Trading. Tier 1 Trading is, in my opinion, the #1 place to go learn how to trade. They will teach you guys the skill of trading. They will teach you really advanced stuff like advanced patterns. They will teach you advanced pattern recognition. They will teach you about the IPDE, identify, predict, decide, execute. I'm pretty sure we've talked about that on this channel. Hey, you know what? Maybe I haven't. Well, I will if I haven't. I'll have to go through the videos and see. I do a lot of content, so whether it's podcasting or video, so it's difficult. But that being said, guys, look, I know what it's like to trade without having a mentor. I've done it, and it's miserable. It's absolute misery. It creates so much emotional turmoil. Now, granted, I wasn't trading with real money without the mentors. I'll tell you that much. But it was still emotional. I didn't know what I was doing. I didn't have any real money at risk in the markets, and yet it was still emotionally tumultuous. It's a good word. So guys, make sure that you get a good mentor, because in the end, that is what's going to make or break you. And make sure that if you do get a good mentor, make sure that you listen to that mentor. Okay? Listen to the mentor. It's going to be really important and pivotal. So guys, if you're interested in learning how to trade, go to Tier 1 Trading, get those good mentors, and hey, I promise you, their stuff is solid. What they teach is absolutely solid at Tier 1 Trading. Okay? I can promise you that. All right, guys. Hey, that's going to wrap it up for this episode today. I will put the link in the description below for Tier 1 Trading. Oh, and also for TradingView if you're looking for a great charting platform. Hey, I use it every single week. I use it in every one of my videos. I absolutely love this charting platform. It's by far the best. It's easy to manipulate and to move around the charts and stuff. It's just great. So if you're interested in a great charting platform, you could do no worse than TradingView. Lowest subscription plans, I think, go for 19. Oh gosh, I'm not even going to remember. I want to say $19 a month. I think it's like $20 a month, somewhere around there, and that's if you pay annually. So, but hey, it's still great. It's still absolutely amazing, and it comes highly recommended by yours truly. I love them deeply, and yeah. So, all right, guys. Well, hey, hope you guys enjoyed the episode. If you did, make sure to like the video, subscribe to the channel, and if you like the content that I'm doing here, odds are you're not the only one that's going to like it. So if you got friends and family, or you've got maybe some social media, make sure to share these videos. Share my content. Help me get this message of financial empowerment by controlling the source of your income and becoming financially free. Help me get that message out there, because I think it's a really empowering message, and I really feel like a lot of people need to hear it. So if you guys like it, odds are somebody else will. So share it. Pump it out and help me pump it out on social media. And hey, if you guys will do all that for me, I will see you guys in the next video. As always, know the risks, plan accordingly, and have a great day.